Welcome to the Trading Market Technicals Morning Call video for Monday, February the 4th. Hope everybody enjoyed their weekend. We had green across the board on Friday, and that was due to our non-farm payroll numbers. And I mentioned two scenarios to play out. If we had a weaker jobs data, risk on would continue. If we had some excellent numbers, I would say that a lot of the market participants would be taking some money off the table, and we'd have a risk-off type sell-off. And we had the opposite. We had an increase in U.S. non-farm payroll numbers, but they were slightly less than expected for the month of January. So risk on continues. And as you can see here in our bar chart, U.S. non-farm payroll numbers for January of 13 were slightly less than expected. So risk on continues. And the market participants saying that Bernanke is going to continue with QE. And that's the reason why we went up. We also have fourth quarter earnings are starting to unwind, and they're pretty much in line and exceeding consensus estimates. So that's pretty much in line. Nothing really to write home about. Economic news is going to be light this week, but so far what has been out for last week, we had a slow and steady improvement in the U.S. economy, but again, it's slower than expected. Okay, our indicators are extremely overbought, and really there's no change. I'm going to run through them as well. We do have a lot of stuff to cover today, so I'm just going to get right into it. Now let's take a look real quickly at our sectors. We have conglomerates, technology, pretty much green, services, industrial goods on the low side. Our econ data, we have, again, light on the econ data for this week. But again, it's going to be all driven, I would imagine, on technicals. We have initial jobless claims really going to be the key over here on Thursday. That comes out on Thursday. And then we have wholesale inventories come out on Friday here. ISM on the 5th, and then factory orders today for the 4th. Now, let's take a look at our indices. And as you can see here, oil was a big mover for the week. And the U.S. dollar, obviously, a big loser. And we do have that head and shoulders pattern, which I'm going to show you. I did mention that to you. I think I showed that last week. Now, a lot of people are starting to mention the U.S. dollar head and shoulders pattern. So you got to really take a step back. When the pattern is highly visible to a lot of marketers, it usually doesn't happen. But anyway, that's something that we'll take a look at. Here's the performance chart for the week. As you can see, for the week, we had big moves up. For the day, we were up in here, 114 on the Dow, S&P, and I continue to say you cannot short a trend that continues to rise. You have to wait for a pullback. You need to have price moving lower low and lower highs. And I get a lot of emails saying, oh, what do you think about the top here? I'm not looking to pick a top. I'm looking to wait for the market to tell me what side to be on. And right now, buying pullbacks in a strong trend is really what you need to be doing, unless if you're uncomfortable, then you just need to be on the sidelines and wait till the market kind of readjusts itself. We do need a pullback. We're due for a pullback, and that could happen at any given day. But again, guessing is not the game here for what we do on a daily basis. All right, let's run into our indicators. Bullish percent index, again, no sell signal as of yet. We did have our 8 EMA hit it again, as you can see here, through this whole November, from the bottom lows of November. We continue to drift higher. We are overbought, but again, not a sell signal. So the bullish percent index still showing us on a buy signal. New highs, New York Stock Exchange, new highs, new lows, back up to the 730 area, again, elevated. So that's something that we need to keep an eye on. We have our NASDAQ record high percent index, again, elevated the whole month of January. And, of course, our start for right out of the gate on Friday, big back hook, and we're up 5, so we're getting close to that 100 percentile again. Stocks above the 50 on the S&P remains highly elevated, 90%. Okay, so that's still overbought. Again, no change on the on a lot of these indicators. Stocks above the 200 on the S&P, up 443, up 6 for the day on Friday. Again, no change. It is exactly what it was the last time, highly overbought. Our New York Stock Exchange Summation Index, weekly, plotted with a 5.3. Looks like it's trying to hook, but if you remember what happened here, we tried to hook back up in here in this one area, and then we rallied another 5 weeks. So this has been on a buy since the end of November. Caught the bottom on this. This is a great indicator to use, guys, for the longer-term picture. For the at least a weekly, and say, hey, where we go from here. We do get a couple little whipsaws in between, but this is a great indicator to continue to monitor as we go. NYMO, our trusty NYMO. Again, look at this. We're in the 14 area, up 22 on Friday, not even overbought. So what does that tell you? 1520, here we come. And then if we continue to monitor price action, and we kind of stay consolidated here sideways to slightly lower, 1575 is not out of the norm here. So keep that in mind for people who want to be looking to short this market. Can't do it right now. There's a lot of money on the sidelines, and if the Fed is pumping 84 billion into this market, you gotta kind of say, wait a minute, you know what? I'm not looking to be short here. I wouldn't, at least not yet. For a market rollover, at least for the pullback, you want to get short, right? But that's all doing time when you get your signals, and I'll show you that in the chart. Copper also picking up momentum, breaking out of the symmetrical triangle. Copper weekly, as you can see here. I'll just blow this up a little bit more. We are breaking out of this channel here, guys. So copper, great sign on a weekly chart that we're breaking out of this channel. You're looking at least a test of the highs, 475, 480. That's going to put a bid into this market as well. Okay, take a look at the VIX. Show you the VIX here. Broke back down again below 13. Highly bullish on the sentiment side. Okay, CPC. Put-call ratio, really no change, right around 91. And just real briefly, when I picked up my Barron's over the weekend, big thing on the Barron's stock alert. Get ready for a record on the Dow. And I saw that in a lot of our papers. So maybe that could be a small little indicator that the market is probably topping. Now, topping is a process. Remember that. So it does take longer for tops to form than bottoms. Okay. And lastly, I want to take a look at the U.S. dollar, and then we'll get into the charts. Head and shoulders pattern broke down below. Now, this has triggered. If this does work out, okay, if this does work out, that should put initial bid in equities and, of course, commodities as well. So this is something that I'll be monitoring. But again, guys, when a pattern, I start seeing a lot of people talking about the U.S. dollar head and shoulders, I start to worry that the pattern is out. Too many people see it, and then it fails. And if the U.S. dollar gets a little strength and can break back above 80, and this will negate the actually really about right around the 80, 95, 81 area. If we break above this right shoulder, this pattern will really be negated. But if that happens, then we'll probably get a sell-off in the market in equities and commodities. Okay, but as of right now, we do have a bearish pattern here, which has triggered. Okay, so let's get right into the monthly charts here. Monthly SPY, looking at a 156.20. Okay, and we are 151.24, so we do have plenty of room to run. As you can see here, we are overbought, but again, overbought is not a sell signal. So we're in this channel, nice channel here, so we could actually literally test this channel within weeks if that's the case the way we've been going. SPY weekly, we're up the upper end of this channel range here, so we're going to see what happens next week, by the end of this week at least, and see if we could break back above, at least close above it. If we do close above it, then I think that we're on target here for a move at the highs here. This is the SPY. SPY daily indicator starting to roll over here, starting to show some bearish configuration. However, we are still in this channel. As you can see here, we almost broke through it. We're at the bottom of the channel on Thursday. I showed everybody on Friday morning before the market opened. Let's see if we can get some follow-through. Again, negated. Price action reversed and moved to the upside. So we have some move to run, and it's probably looking at a 152 in the SPY. Now let's take a look at our 60-minute. Said watch for this first trend line break of 149.65. We did, but we ended up catching some support here on the 50 period on a 60-minute chart. We had some negative divergence, which is now negated, and we're still back to this area. Now we're back testing this first this first trend line on a 60-minute chart here. So as you can see, we back tested. Let's see if we break back above it. If we break back above it, then we're going to have to reevaluate where our new pivotal low on a break to see where we go from here. Okay, now this is the weekly chart of the S&P cash. Really same thing. As you can see here, though, RSI is really not overbought yet on the weekly. So believe it or not, I know it sounds crazy. There is room to run. 1520 would be the next. 1515, 1520. We're almost there now. Another 7 points could be today, and then really need to see a reevaluate. But we start getting into these areas. 1575 on the monthly chart is going to be the next really big pivotal high here, and that's the all-time high where we're going to really see how we get there. And if we continue to get up there, then I would say that being short at 1575 with no pullback would be a pretty decent little bet. But again, we're not looking to bet here. We're just looking to see if we could get a pullback, and more than likely a healthy pullback to this area 1450, 1435, maybe a zigzag motion back down to this first trend line, and then a back move higher would be very healthy for the markets. And I think everybody's looking to buy the market now. S&P daily cash, as you can see, the CCI broke below while this actually broke higher. So momentum again still waning, but momentum could be momentum. We could lose momentum and markets still be rallying here. So really nothing big to say. But we're in this back into this channel where we were, as you can see on Thursday. We caught the 2-day low, a little bottom here, and then now we reverse course. So let's see if this channel breaks here. S&P 60-minute. I readjusted our fib retracements at the high of Friday, so we'll see where we go. Again, guys, what we did here, we're just looking at a target. If we do get a pullback, we'll probably be somewhere around a 1555, 1560 area. That would be that area here for this sector here, as you can see on this bearish rising wedge, excuse me. So we took the line here, we added from here, and that's where we got right up in this area here. So this is where it would project to. Okay, now that does not have to happen. We can continue to rise higher and break this 1515 high, 1520, and then we would just reevaluate. But as you can see here, our momentums, MACD and our RSI starting to roll here, losing a little bit of luster on the 60-minute. But that's something that we'll just keep an eye on. Here I showed you on Friday morning we did have a bearish head and shoulders pattern on a 30-minute. I did stress it is a 30-minute chart, so they usually do fail sometimes. And sure enough, we failed. So I'll be removing this tonight for Tuesday morning. But again, we had something show up small, and that failed. Now, this is the leader. The transportation sector, which is the IYT ETF. This is the leader. As you can see, I showed you and I stressed this. Watch our indicators starting to roll. But I said here, this is going to be where the trigger would be a 102.31 break below and close would give a sell signal to the transportation sector and probably help the market pull down. Well, that literally tested by almost a penny on Friday as we broke that trend line. I mean on Thursday, where we broke that trend line for Wednesday's low, and I marked that right here from Friday morning's video, and sure enough, we popped up back into this trend line here, right into this lower trend line of this channel. So that means that we do not have a sell signal in the market because it did not trigger. Again, you see how I use these price patterns to say I need a pivotal low. That'll be Wednesday. Thursday we hit it, but we didn't break it. So that's going to be what I was watching on Friday, and sure enough, back into this channel. So the transport did not issue a sell signal. We're back into this channel. So constructively, long term, we look very healthy. And I think that we will probably get to that 1575 this year, whether it be in the next 2 weeks, 2 months, but I think that we are headed that way. The diamonds, same thing. We caught that lower trend line Friday. We're back in the channel. Diamonds have a lot of room to run here, guys, at least to the 140.50 area. Again, overbought, but again, that's not a sell signal. We really need to see. I'd like to see us start taking out Thursday's low on the diamonds, and of course Wednesday's low, which is Thursday's low as well, in the transportation sector. So that's the areas that I'm looking for here. Russell, our head and shoulders. By the way, our inverted head and shoulders on all of our sectors that we follow have hit their targets. That's pretty amazing. We have all hit their targets in price. So I'm just leaving this here just to show you that we did hit it, and that's coming in from the, I think we kind of addressed this early December. That we had these patterns come in. Anyway, IWM's broke down below, so our new pivotal low will be 88.61. So 88.61 in this Russell ETF is what I'm looking for. So now we have a pivotal low areas in our sectors that we follow. We want to see broken, and if we break and close below that area, then I would be more inclined actually to get short the market and start looking to get short a little aggressively for at least a little bit of a pullback, maybe back into these areas here where that gap area, which is now support. So again, have your plan in place. Look for your lows, and that's when you want to start looking to get short the market. Apple weekly, just really a poor performer. We didn't even get back above this area of this second trend line, and that to me tells me that Apple may be a little bit in trouble for at least some time. We could easily break down 100 points here, easy. Get down to this target here. I've had these notes for the last several weeks, and we couldn't even get back above the previous week's candle. So not really good. So let's see what happens this week if we can at least get back above it. Now this could just kind of grind higher, reflag itself into a bear flag, and then break lower again. And this is where I would look to start to buy Apple. Would probably be around the 360-ish area. 350 to 370, you got to give it at least 20 points and start buying Apple in there if you want to do like a sort of like a long-term hold. And if we break below the 200-week moving average, I would look to get out again and re-enter. Now, it depends on your picture, on your long-term objective goals. If you're looking for something that's going to be a 5-year hold, then obviously that's not the case. If it's for a trade, that's totally another story. So make sure you map out your objective in the trade in Apple if you are trading it. We have a daily chart, and as you can see here, we just sat sideways for 4 days, and we actually broke back below this little channel here, this little sideways consolidation. So it'll be interesting to see where Apple goes. But as you can see the repetitive patterns, we have head and shoulders channel. We had another head and shoulders here channel. Now we morphed into another head and shoulders, which we hit our target, as you know, at 460. And now we have another channel. So again, guys, not looking too good in Apple. Apple really needs to show itself. Maybe a buyback or something, but something's got to give here. Otherwise, I think Apple can get a little bit lower at those areas. Q's weekly chart, as you can see here, really not much going on for the last 4 or 5 weeks, partly due to Apple, but we have some room to run here. So I'm really interested to see if we can break above this consolidation of 67.91, and then look to break above that area. That'll be this area here, and once we get above this, then I think we could start looking at some of these highs back in September, October. All right, guys, that's really about it. Hope everybody has a great week trading. And remember, please keep your stops in place. If you're uncomfortable, take a step back and just look for the best trade setups. Longer-term picture remains intact, but again, we are really, really overbought, and we are due for a pullback at any given time. But again, that is not a sell signal. Please remember that. Don't look to pick a top. Let's see the market come in a little bit and then reevaluate that pull in and see if we truly are coming in. Like we had last week, we had 2 small days and the market ripped up to the upside on Friday. Okay? Have a great day, and we'll talk to you tomorrow.